What's going on, everybody? We had an interesting weekend. Bitcoin came up and tested its previous cycle peak. It came up to the 69,000 area and it was rejected. Perhaps we fall down and we test our descending resistance that we recently broke out of, use it as a bouncing off point, and then retest our last cycle top before going on to test our all-time high of Bitcoin. Now, if this descending trend fails to hold up as a support, we may fall down a little bit more. Test 65,000 psychological support. If that fails, test the 200 and potentially the 50 MA down in the low 60s. If Bitcoin can not tank from here, if Bitcoin can just maintain itself, I do think we'll see a flip across of the 50 and the 200 MA, known as a golden cross. They are getting closer and closer, and now they are within about 1,000 away from each other. That is a good sign. That is something I like to see. That is much better than seeing them be about $10,000 away from each other or more. They are getting closer and closer, which means consolidation has taken place, and I do believe we are setting up for our next leg up. And so far, this cycle has been playing out perfectly to a T. We had our pre-halving run. We, of course, had a little bit of front running because of the spot Bitcoin ETFs that broke new all-time high before we normally would. But so far, so good. Does look like it'll be a positive October, and hopefully by the end of this month, we have broken 69,000 and we're at the very least testing all-time highs, if not already getting to prices never seen for Bitcoin in the month of October. Now, I have an article for you guys. I'll leave it down below, but I just wanted to take one snippet out of this. And they mention it in their title, but they go over 5 things total. This one thing, the lowest search interest since 2020. This makes me very bullish. Retail is not here. Retail is basically completely absent still at this point. Bitcoin's mainstream engagement is still lacking. Google Trends underscores this, that despite being near all-time highs, the price action is not getting anyone excited unless you're already involved in crypto, unless you're already deep in the space. Bitcoin scores at 22, is the lowest in a year and among the lowest values in the past 4 years. I think, and others think as well, is a break of new all-time high is what gets retail's attention again. Remember, in general, retail chases. In general, retail catches FOMO. When things are breaking out to new all-time highs, that's when it's the talk of the town. Not when things are at their lows. Not when you should be buying and accumulating, but rather chasing the top. Chasing something that has already given good gains. And that is one thing that makes me very bullish about Bitcoin right now, is retail is really uninterested, uninvolved right now. And to me, that is a huge positive. Although I will admit it is not a positive for my YouTube channel, but I'll take the trade-off. And here's something else that's been going on that's kind of exciting. European investors pour a record $105 billion into the US spot Bitcoin ETFs. And Eric Balchunas points this out. Flows into US-focused ETFs by locals in Europe is now at a record 105 billion year to date. Why not? The SPY is up 24% versus 10% for Europe. Asia's also funneling record flows. And inflows into the spot Bitcoin ETFs accounted for about 75% of the new capital that helped Bitcoin run over $50,000 back in February of 2024. Some people say that the spot Bitcoin ETFs are negative. Now Wall Street can kind of manipulate crypto. But in the end, more money will flow in because of the spot Bitcoin ETFs. In the end, I do think it is a positive. Now, on the very, very long term, though, thinking about how BlackRock will inevitably get more and more assets under management, more and more share of Bitcoin. That is one thing to be aware of, one thing to be concerned about. Now, I do want to quickly mention BTBT. This is a Bitcoin miner I'm very bullish on for the rest of the cycle. They're getting heavily into AI, and I do like that about them. And if you want to add another Bitcoin miner, you don't have a Bitcoin miner that offers any exposure to the AI space, I think BitDigital is a great choice. And as a side note, they also stake ETH. Now, we do have some somewhat recent news. This was about a week ago, but I totally missed this. So I just wanted to mention it to you guys that BitDigital's AI is growing. They acquired a data center for $62 million Canadian, which is 46 million USD. And they're basically saying that this vertically integrates their HPC operations with a fully operational, fully leased tier 3 data center in a major city. They also like this about it, that it's a major city. And there's something interesting that kind of details why. Finally, BitDigital will enjoy greater operating flexibility by co-locating its own GPU inventory in Innovum data centers, offering capacity to customers on a just-in-time basis. An important differentiator in a marketplace where time to market is paramount. Now, I will spare you with the boring details, but basically Innovum is an owner, operator, and developer of HPC data centers that started in 2020. And they're operating a 4 megawatt tier 3 data center that is powered by renewable hydroelectricity. This site is leased through 2036, and it has 2 5-year extension options. And here's something that's very important. Innovum already has strong demand from both existing and new customers for co-location capacity and new capacity to be brought online. And BitDigital CEO Sam Tabar also goes into why it's important that it's in a local location in a large metropolitan area. Why is that important? This existing site in Montreal and near-term expansion sites are all located in Tier 1 cities. We continue to see major value in having data center assets adjacent to highly populous cities areas, as they present the most value for inference models where latency is a primary concern. Following this acquisition and contemplating our expansion program, we believe that BitDigital will be well positioned to accommodate inference workloads. In tandem with the build out of our data center footprint, we will continue to invest in our GPU as a service business, with the two units coalescing to establish a formidable player in the HPC industry. Now, I like seeing this, honestly. I like to see that they're really pushing into their AI. And I think by the end of this cycle, BitDigital's AI segment will be much larger. And I think that is a positive as we slowly enter crypto winter 6 to 12 months from now. Now, looking at BitDigital on the chart, it's finally breaking out of this long descending resistance that it's been in for since December 2023. So almost a year it has been in this kind of a downtrend, but in an overall longer term uptrend. Mostly the Bitcoin miners have been doing bad because of the halving. There have been some bounces back up, but overall, since January of 2024, a lot of these Bitcoin miners are in fact down. Since earlier in the year, a lot of these Bitcoin miners are still down. Things are starting to shift. We are starting to get these breakouts left and right. We are starting to get these recoveries from the Bitcoin miners. As Wall Street knows that once Bitcoin breaks to new all-time highs, we will see many of them flip to profitability. They might give forward guidance for profitability. I expect this quarter to not be profitable since we're already basically through it. We're already into the next quarter. So when these companies give forward guidance, they will have a great idea of, is that upcoming quarter or the quarter we're in now, not the quarter about to be reporting, but the next quarter to be reported, are they going to expect profitability? They'll know where Bitcoin is from October, November to December. Most of these miners are reporting earnings in either November or December. So basically the execs, they'll have a great idea on forward guidance. They'll have a great idea of, are we profitable? Are we not profitable? That's all Wall Street cares about right now. And because of the halving, that has brought them back to unprofitability. Some were actually profitable before the halving, which is something we didn't see last cycle. So I'm very excited for the Bitcoin miners still. I think this is where the turnaround happens. I do think we are going to start seeing a surge into the Bitcoin miners as Bitcoin breaks all-time high. This is basically what they've been waiting for. They've been waiting for Bitcoin to get to a level where the Bitcoin miners can be profitable. For the last few months, Bitcoin has been in the range of like 50,000 to under 70,000, obviously. And at this range, Bitcoin miners are basically all unprofitable. Once Bitcoin breaks out to new all-time highs, once Bitcoin goes and tries to go towards six figures over 2025, this is when the Bitcoin miners will be pulling in money hand over fist. This is when they're profitable quarter after quarter after quarter. This is when the hype really draws in. That is when we will be selling, trimming, selling covered calls, taking profits, and planning our exits. That is when retail is suddenly all interested. That is when retail is FOMOing in. That is when I get a ton of questions of, should I still buy? Is it too late to buy? This is pumping a bunch. Can I buy now? You don't want to be in that situation. And let's finish this video up here. We do have some economic events coming up. We have big companies reporting earnings. As for economic data, there really isn't all that much. We do have PCE coming at the end of this month. That is going to be pretty big for the FOMC rate cut probabilities. Right now, it is basically fully expected that we're going to have a 25 basis point cut. That is probably what it's going to be. The probabilities won't change much regardless of PCE, in my opinion. Pretty obvious it is going to be a 25 basis point cut, at least according to probabilities. We do have on Wednesday existing home sales report, and the Federal Reserve is releasing their Beige Book, which is a summary of economic conditions across the 12 Federal Reserve districts. Thursday is going to have initial jobless claims. And then Friday is going to be the release of consumer sentiment report. I think the huge thing is going to be the end of the month PCE. Is inflation still cooling down? Are we still looking at those rate cuts? Or is inflation going to suddenly tick up out of nowhere and we're looking at a pause? Jobs data recently has been improving. That is not necessarily a good thing for rate cuts. Seeing inflation come down and seeing jobs unimprove, seeing jobs get worse is exactly what we need for rate cuts. At the very least, seeing inflation go down where we want it and seeing jobs remain somewhat stable, we'll still get those rate cuts. But if the job market gets very strong, if inflation stays where it's at or goes a little higher, the likelihood of rate cuts goes lower and lower and lower. But I do think we're going to get more rate cuts. I do think inflation is coming down. At least the numbers they're going to give us are going to keep coming down. And it's going to be extremely important to see what job data gives us. And yeah, like I said, with PCE, this is coming out at the end of the month. We have been seeing it in the high twos. It has been coming down. Last read was August at 2.2%. I mean, if we get this reading and it's like a 2%, 2.2%, that is what we need for the next rate cut, in my opinion. If it ticks up to like a 2.5 again, or going up towards 2.4, that might be worrisome. I'll try to look at what the expectations are here and get back to you guys on a future video. But yeah, I mean, we are getting towards that 2%. This is what the Fed wants to be able to cut. Whether the numbers are cooked or not, that's a whole another debate. But we just want to see those numbers come in, allowing more and more rate cuts. This will help risk on assets. This will help Bitcoin. This will help the riskier Bitcoin miners that need to acquire high interest rate debt. But thanks as always for watching, guys. How are you feeling about this week? Do you think we're going to have a red week, or do you think this is just kind of a little bit of a retracement day, a little bit of a snap back to reality before we establish some supports and continue our October? I do think this month we will at the least test our all-time high. But we do need to flip and hold the 69,000 last cycle peak. We need to hold that first before we can break all-time high. It might turn out to be a hard resistance to break. But thanks as always for watching, guys, and I'll see you on the next one.